Hi, this is Ron Rowland for Money and Markets TV. You've heard the old saying, the rich get richer while the rest of us try to keep up. Well, a big reason that's true is because the wealthy have access to investments that simply aren't available to ordinary folks. You can't catch up when you're not even on the same playing field. Take private equity, for example. In the simplest terms, that just means having an ownership stake in a private company. According to Forbes magazine, the top 5 private companies in the world are Cargill, Koch Industries, Bechtel, HCA, and Mars. By any definition, these are big companies. Cargill's estimated revenues last year were $110 billion. But despite their size, they're not represented in most investment portfolios because their shares aren't for sale on any stock exchange. However, these private companies do sometimes sell equity when they need outside financing or when one of the founders is ready to move on. When that happens, they create a kind of hidden stock market for elite investors. In other words, private equity funds make private deals with private companies in private meetings. The result? Well, they're private too. But we can be pretty sure that there's a lot of money changing hands, and it's all perfectly legal, thanks to loopholes in the securities laws. But now, the door to this private equity world is cracking open, thanks to exchange-traded funds and exchange-traded notes. You still can't invest directly in private companies, but you can invest in publicly traded business development companies, or BDCs. These firms lend capital to small and mid-sized private companies at relatively high rates, and in return, they often get an equity stake and take an active role in guiding the companies in their portfolios. The best part is, you can buy shares in BDCs the same way you would for any other stock. The same is true for some of the larger private equity fund sponsors. But choosing the right company to invest in can be a complicated process. So just like with other specialized niches of the market, ETFs and ETNs can give small investors convenient, diversified exposure. The original entrant into this space was the PowerShares listed private equity fund back in 2006. More recently, a pair of exchange-traded notes joined the list. The UBS eTrax Wells Fargo Business Development Company ETN and the UBS eTrax 2X Leveraged Long Wells Fargo Business Development Company ETN. They both attempt to reflect the results of a Wells Fargo index of BDC stocks, and BDCL adds a 2 times monthly leverage factor. If you look up the stats in any of these names, pay special attention to the dividend yield. The numbers are eye-popping. BDCS is currently yielding about 7.7%, while BDCL's yield is estimated at about 17%. The payouts are so high for a couple of reasons. One, because the underlying private companies are often very profitable. But more importantly, it's because this is a risky, volatile market segment, and BDCs are often rewarded for taking that risk. Whether or not to invest in one of these products is a personal decision, but if you're building a long-term growth portfolio, you should definitely take a look. Private equity is a neglected, but potentially very profitable option. I'm Ron Rowland for Money and Markets TV. Thank you for watching.